What is going on, guys? Welcome on into today's stream. We are live and we're going to talk about where the hell the strength is right now in the market, because there actually, believe it or not, there actually is some strength, even though day, I guess, technically due of the Santa Claus rally time frame, the S&P is down 0.36, whereas the Qs, the NASDAQ is down about 1.3%. IWM small caps down about 0.69, 0.7%. As we go live here at the start of Power Hour today, what is today? Tuesday, the 27th of December. So a couple days left of the year, a couple days left of the week, obviously the shortened week. We're going to cover where the heck the strength is and then dive deeper into some other stuff, some small caps that are popping off. A couple stocks off our watch list are popping off, two actually to be specific. And we'll cover all that good stuff here in today's stream. We'll just hang out. For the most part, I'm probably done for now. I haven't touched anything since this morning in terms of any potential trade opportunities. I'll cover at least what I did, what I liked, and we'll start there. So first things first, where's the strength? Caterpillar. Things up 1.25%. It was actually up a little over 2%, I believe, at one point, say, or around 2%. Check out Caterpillar's daily chart. Look at this. Thing is going out. It's not at all-time highs, believe it or not. You zoom back to 2021 May, actually into early June. That's where we hit 246 or so, 246, like 75 is Caterpillar's all-time high. So we're getting close. Got to push up to about 245 today. That's where the strength's at, the Dow. So we just talked about S&P, NASDAQ, IWMs, Russell. They're down. What's up? The Dow is actually up today. The Dow is up today, believe it or not. So the Dow continues to kind of hold that 200 moving average, the 325 on DIA. It's the Dow Jones ETF. It's like SPY's equivalent, just on the Dow. I'm holding that 325 roughly. We're sitting at 332. So it's got about a $7 buffer before potentially breaking down and not looking too good on the daily chart. But from right now, to be honest, it looks fine. We'll see what happens if it gets pushed up to the upside here toward 340. But for now, it looks decent. So that's right there where the strength is at. XLE. Energy stocks up today. XLE, the sector is up 1%. Inside of that, ExxonMobil's got a big chunk of that. ExxonMobil's up 1% and almost a quarter, 1.16. Why is that the case? Well, take a look at oil. Oil was up a bit more. It's actually coming down as we speak. So maybe there's an opportunity there, to be honest, for a short trade on ExxonMobil into the close if the S&P looks weak. As oil's come down, held this like 79.40 area a couple times. But look at this. It broke below it. Came back up, seemingly getting rejected here towards the higher end of that zone. So this is actually a pretty high watch. If you're looking for a short-term trade, this could be a high watch for a potential downside move on crude oil, which could signal move down ExxonMobil into the close if this continues. So it was up a lot more. It just recently came down, and so that's kind of why those energy stocks had decent moves early, and they're kind of bleeding a little bit this afternoon. But the S&P is it's not at lows. It's just kind of hanging around. So that's that. What is going on? Chill day so far. I mean, I have to say today for me was great. I mean, I wasn't expecting much, to be honest. And if what I did today was what I did for the entire, was what the summation of the entire week was in terms of P&L standpoint, I would be completely fine with that, going into this week. So I'm kind of playing, not at this point with house money, but I almost feel like that the rest of the week. So I'm going to be taking it very, very light unless something just looks beautiful. There's no need to rush into anything, We'll get into next year, and there should be some good opportunities. We'll talk about where I think we could see some good opportunities. We talked a little bit about last night, but we got even more downside in some of those names. So we'll talk about that here in a second. But Caterpillar was my first one. I posted about this kind of after the fact I can pull the Discord up. Here it was. This is what I posted on the Discord. We had this right here. It was a screenshot of my Webull. Essentially held the levels of yesterday or Friday's close. We kind of consolidate around this 240 area between 239 to 241. So right around that 240, we consolidated on Caterpillar. We had a gap up at the open, came down pretty much right into that same range right here. Also some good volume support. And then that wick, huge wick. I saw that wick on the 15-minute chart. That's what I had pulled up. I entered for calls, looking for a push to 242 plus. That was pre-market highs and potentially further. We got it, and I sold into that. So I had contracts. I bought them. They went down to a low of 82 cents, 83 cents this morning on that wick down. I bought them at 110, and then I ended up selling them at 170s, 180s, even $2 on the last one, I believe. So that was it. I mean, that was pretty good. And outside of that, I was like, all right, like I'm kind of good to call it a day here. And then one other play, smaller play, was mRNA, was looking at this for continuation to the downside, looked pretty weak. And this is what I saw. Trend line to the downside, and we had pretty much come down like right up into these lows. And we had this nice little, pretty bearish looking setup. And so my stop loss is going to be up over this 189 area on it when I entered it somewhere in here. I forget exactly where, but my stop loss is up over this 189 roughly, which would have lined up close to VWAP. And then we ended up getting a flush to the downside, and I sold down towards 185, and then actually just below 185 I sold. But on a smaller position size for that. So that was it. Outside of those two, I was like, okay, well that's two, boom, done. And those are big moves, man. I mean, mRNA, thing is down 8.5%. It's pretty impressive. It was down 9% at one point today. Yeah, it doesn't beat Tesla, which is down 9.2. Can you guys believe that? This is actually pretty crazy to me. Tesla down to almost 110 now. Almost 110. It's down another 9% today. I think it's nuts. And you look at this chart, it's like we said, it's in free fall mode, complete free fall mode. The thing has been down. How many days in a row is this now that it's down? Let's see. It is down 1, 2, 3, 4, 5, 6, 7 trading days. Is that accurate? Yeah, it looks like 7 days in a row, which is honestly not that insane. But out of the past like 10 or 11, it's down like 10 out of the last 11 days, which is like more impressive. And it just gets worse and worse and worse. And so for me, what I think about this is like, we kind of had Tesla, which had held up pretty well. If we think about this, as you broaden the chart back out, it held up like pretty well so far this year until like 2 months ago, till October really. Like end of September, this thing was sitting up here at 312, to finish off September, which really was not that long ago, a couple months ago. So it held up pretty well, all considered. You look at this chart, though, you say to yourself, well, look at that. You got your nice head and shoulders and absolute destruction to the downside. Now, filling gaps to the downside, the next substantial gaps to watch are actually down towards like the low 80s, mid to low 80s, and the upper 70s, mid upper 70s, believe it or not, which is a long way to go. But at the aggressive pace that it's going right now, I mean, I wouldn't be surprised if we hit those levels, to be honest, if this thing just keeps waterfalling. At some point, it'll have a pretty aggressive bounce. You want to be the judge as to when. Take a guess. Really, it's a guess. But you had a lot of people who are loaded in this thing, a lot of big names, a lot of big money managers that were more, I guess, aggressive, that were more open to risk. I guess more new age money managers were positioned pretty heavily in this stock throughout this year. And many people on every dip were like, I'm buying the dip, I'm buying the dip, I'm buying the dip. And now you're seeing that it's, the dip is dipping and it's getting really bad. And you're seeing probably margin calls across the board. You're seeing the effects of tax loss harvesting towards the end of the year. And you're seeing the effects of just pure momentum and panic. So you add all those, and of course, on top of that, the fundamentals, right? Add the fundamentals of recession, no one's going to buy a Tesla, and that's just the economic cycle. Does that mean Tesla's going to be gone in, a year? No, they're probably going to be fine. Well, maybe, I don't know. They'd probably be fine, as the ebbs and flows, the economic cycle kind of moves on. And when things get better, and outlooks are better. And again, it might be when things are pretty bad that we can start to see the stock price move up ahead of time, going into maybe a better time, right, for the consumer. But that's when it will probably move back up based off fundamentals outside of, news. There was also some more news about they were shutting down, or they're at least stopping production in Shanghai, I believe, today. That news rolled out this morning. So add on top of, add even more bad news on top of, a stock that's getting destroyed. Here's your recipe for another down at 9% day today. Ever since it broke down below the prior support of this like 167.50, the thing is down another 30%. 30%. It's down 30% realistically, or over 30% in like 2 weeks. So, yeah. No one's gonna be buying. And we've been talking about that, right? The past couple of weeks, we've been talking about that. Makes sense. Was it a super high conviction, trade? Nah, maybe not, because, you want to bet against Elon Musk and Tesla. If you've done that the past, a couple of years, more than just the past couple months, but go back years, people have been saying a lot of terrible things and that they're never going to make it. And look what it's done. So, that's why it was kind of a sketchy short, months and weeks ago, but it made sense. And now it's panning out. I think I personally like some of the other names Like we talked about Lulu. Lulu, by the way, is up today, which might not be a bad idea to start, keeping a closer eye on it. It's holding an uptrend right here on the daily chart. But to me, it's like I like the charts or the stocks like this. And Lulu most likely is not going to have an Elon Musk type of presence to, will it to green, into a horrible recession, if that's where we end up going, into a pretty bad recession when no one's buying Lulu anymore. Most likely it's not going to do it's not going to have that behind it. So that's, a reason why I like something like this. And there's other names out there, you go to be the judge, right? Look around, like just think about what people are not going to buy in a recession when money starts to dry up, right? And it's not like that impossible. It's really not that impossible, and you can find a much better risk reward place, I think, elsewhere outside of shorting Tesla, especially now. At any point the thing could bounce back 20, 30% like that, like that. So just be careful if you're shorting it outside of day trades and intraday patterns and all that good stuff, because there's great patterns there and there's great opportunities. But be careful. Another interesting thing, right? We talked about some of the good. What about some of the bad? We talked about Tesla. Now, NVIDIA, we talked about this last night, I believe. Gap, maybe not last. If we didn't talk about it last night, I definitely charted it out this weekend. And I was like, hey, this looks pretty good. We talked last night, I believe, right here about this 149 area holding. It did not. I got an alert because I set the alert, I think, on the stream last night. And for those who don't know where, we do go live Sunday nights. This time it was Monday because the market was closed on Monday, but pretty much every Sunday or Monday, whatever the market's, the day before the market opens up for the week, which is most of the time, 9 times out of 10, Sunday night. Just for like an hour to kind of talk about what's going on and a lot of good stuff. And we had this leveled out. The thing is, if I go back to my chart, I had essentially a line. I got rid of it now under this level right here. We broke it. I wanted to see a retest. We kind of got close. And when I say we got close, we got within like $1 away. But I didn't want to. I wanted to see the price action come up a little bit closer to 149, up into here at least. We just didn't get it, so the setup didn't work out. But oh my goodness, if you played that, or if you had the opportunity to play that, at some point today, my gosh, NVIDIA had a beautiful gap fill. That gap is now filled, so we can kind of get rid of this white box here because it filled a gap, and that was the target if you were trading it. So you don't get them all, but again, do you need them? Of course, that setup just didn't perfectly or didn't present itself the way that I wanted it. So I avoided it, and would have, in looking back, would have made money, but I made money elsewhere, so I don't really care. There'll be a million more setups on a million other stocks like this, but that's pretty weak. Meanwhile, AMD is only down 2%, so AMD is holding up a lot better, around $63. If AMD holds 63, that could be a support zone. We'll have to watch, but NVIDIA was stronger, and now it's giving it a lot of it back, so it's kind of catching up to where AMD, I guess, big picture of the chart, kind of looks. Apple briefly hit my alert, which was under this like 129 area. So it briefly went under 129 on Apple, like right here, and then it bounced right back up. I'm not a humongous fan of it right now, but it's a high watch because Apple's teetering on a big time breakdown. So keep it on the watch, but Apple's very, very close to potentially seeing some big time downside. Got there today. Do you want to play it on the initial break? No, because there's no guarantee that initial break is going to give us continuation. And on a week where there's lower volume, I don't think we can just start guessing when we're going to get the continuation and when we're not. So just be careful when it comes to that stuff, across the board. Let me pull up my volume went. I must have deleted it by accident. Let me add it back. I don't know why the volume is like gone, but it's like, what? There it is. She's back. But yeah, lower volume day. Not too much lower than Friday. How much? So far, we still got, a little bit to go. 45 minutes to go until the close. Apple's traded about 54 million shares almost, and it traded about 64 almost on Friday. So it might actually surpass Friday's volume. We'll see on that. But it's teetering on a really interesting area of support. So ideally, what you'd want to see here is a bounce. Because it's been down a good bit from the trend line. So, it's down like $20 in the past like 2 weeks, not even, right? Bounce it back up, lower high, and then this next move down is a better, higher probability break, unless the market's super weak tomorrow. We'll see. But in a perfect world, I would kind of want to see that. We'll see if we get it. So that's the look. 3-month chart on Tesla looks horrible. I'm sure it does. Let's take a peek. Yeah, that's pretty bad. That's pretty bad. I mean, it had this little range between this 200 and this 160, like 8-ish. But yeah, ever since that went whoop, whoop, gone. Short Apple heavy at the open. Boom. Nice. Playing it both ways. Yeah, I mean, that's kind of how I felt too. Was like once even Nvidia ended up doing a lot better than, to the downside than I thought at the time. But I didn't want to short personally right off the open. Just not my style of what I like to do. And also on the move down as Nvidia hit the trigger and Apple briefly hit the trigger that I was looking for. I don't want to play it I don't want to play the breakdown and the breakout. You know what I mean? I want to play the retests ideally. And we didn't really get the retests, or at least on Apple, we didn't get the move down way below 129, come back up, retest it, and then break down. We didn't get that. We kind of just broke below a little bit and then bounced right back and have held that level since the rest of the day. So we'll see. Not expecting too much, to be honest, to finish off this week, but we shall see. Loading up on UVXY. You know what? Where's the VIX at right now? Check this out. The VIX is actually up today, believe it or not. Interesting. Well, I guess not interesting because the market's down, right? So that makes sense. But the VIX has been super weak, which every time the VIX comes down sub $20 down towards 19, this thing ends up bouncing pretty nice. We shall see. The thing is, all these upper wicks and these big moves, these big rejections have me, I don't want to say worried, it's not the right word, but have me like thinking like, maybe the VIX just kind of bleeds a little bit longer and kind of settles down a bit more before the next pop. So we'll see. We will see. Keep an eye on it. Cameron's in the house. Same bearish first half of the year. Scalp SPY puts this week. Yeah, I was looking at SPY a few minutes ago. Check this out. Here's the spot that I'm looking at. If I look at the daily on it, we've had a couple candles opening, closing. Right, this like 383 has been a weird point on SPY. Has held as the low, roughly the low back on the 21st. Was the open on the 22nd. Was essentially the close on Friday. And it was where we opened today, and we just can't seem to break back above it. So that's kind of my spot in the sand right there, is at 383 for right now. Above that, and maybe there's a little bit of a long trade. There could be even a move back to 390, dare we say, this week. Again, if it is, if we do see any Santa Claus rally and have a seasonally strong time, we'll see. So technically speaking, right, roughly from, I guess technically you go off of I wonder how you classify it, but if you go off of Thursday's close, because like the technical 5-day period of like the rally is like last Friday through this coming Friday. So if you go off of Thursday's close, I think on average you're seeing like in the low 1% rallies, and that would put us like around 385, 386 on SPY. If you kind of hit what we've been generally seeing in terms of this week in the markets in the past couple of years, past like 6 years have been all like, around 1.2% roughly to the upside. I think it's actually 6 years in a row we've been up in that last week of trading of the year. So it would put us, a couple dollar upside, not looking for, probably not looking for 390 this week, my guess. But if we do, then hey, cool, I guess, right? Small, technically still have room. 50 SMA up here towards 388.40. Well, we'll see. We will see. We will see. Baba, strong resistance at 91. Let's take a look at Baba. I haven't checked in on this one in a while. Yeah, it's trying to curl off this level right here, but yeah, I see what you mean though. That 200 moving average, it's really struggled to break above that and have any serious continuation above it. So it's coming up into resistance. It's also prior support around this area, around the $90 area. It's been prior support over the past couple of, 6 months. So we'll see what happens around this area. Pretty crucial spot, you'd think. Decent volume been traded today on Baba. Seen early this week. Yeah, so that's the thing. I wouldn't be surprised, right, if we get a bigger bounce towards that 390 level this week, up into the mid 380s, 390. Wouldn't be surprised. My gut tells me after Thursday of last week, right? We had this not weird, right? But we had this big lower wick on Thursday, which has the looks to me like we want to reverse. So I'm thinking that as long as we kind of hold this, like, what is this level right here? This is 378. The two wicks on the day prior and the day after that big move down, as long as we kind of hold that 378, we're looking good. 375 roughly is 374 like 90 or 374.75, whatever. But like 375, if that area goes and we break below that, not looking good, obviously. We're probably coming down 370, even upper 360s, I would think, after that. But for now, if we hold 378, I kind of think we have the maybe a setup for a bounce. Let's check back in on that 5-day average of the put-call ratio. Let's check. Because I want to check where that's at. We're in fear, but who cares really, to be honest. Yeah, it's sitting here at this 1.06. It's been the most elevated for the longest. Like in the prior spikes in the put-call ratio, we got up to 1.1 and then kind of fell off like in the coming days. So we'll see if it holds up here over 1 for a while. We generally don't spend too much time over 1. We kind of did back in September and I guess October, but we generally don't spend too much time over 1. So we'll see if it holds up better this time around. China situation. Yeah, the China situation is kind of nuts. I was seeing reports of like, they're probably in like some of the most insane numbers of cases per day and deaths per day, right? Or something like that now. But they're in like this position where it was like everyone was done with their quarantines and not with like the restrictions that China was putting on people. Now people are kind of up doing, I don't know the details, all the details, but there's less restrictions necessarily, but that's led to just kind of an absolute blow up in cases. Which is pretty crazy, but I don't really know how deadly it necessarily is on a relative scale. And to be honest, I don't know. It's kind of running its course at this point, and they're just letting it do its thing. And people are like, we're done with this, with the lockdowns and the quarantines and the mandatory quarantines. It's like, they're going to do what they want to do. That's kind of what it felt like that people kind of got to. Check this out. ARK. This is a pretty interesting chart. ARK's inflows and outflows. So on a monthly scale, let me get myself out of the way. So this is ARK Invest, Kathy Wood. By the way, with Tesla getting rocked, you're seeing a lot more. Well, to be honest, not as bad as it's been, but we had some pretty scary times over the past like year in terms of like market hitting lows, and people got pretty fearful. And so I'm not surprised by this big red outflow candle to the downside here on ARK, but I'm surprised that we are not seeing more outflows now. This is on a monthly time scale, and I'd imagine this number gets updated as time goes on. So I'm curious to see, especially with tax loss harvesting, I'm really kind of interested to see, where the outflow numbers for like the month of December, if they come in crazy or something like that on ARK. But obviously it hasn't been, when you see something like this chart, it's obviously hindsight, right? Hindsight's 2020, obviously, but this is just telling you like we've got euphoria, right? And so then it just completely fell apart, and now you're going to new lows, Miss Kathy Wood. So, good luck to her. It's unfortunate to see because a lot of people are getting crushed, but I want to check out this site which tells you her current holdings and all that stuff. So Zoom is their number one at a 9.32% weight. What is this? Exact Sciences, 8.81. It's kind of a lot, right? Tesla's number 3 at 6.46%. Roku, then Block. These have all gotten freaking annihilated. Shopify has bounced a little bit off the lows, but it's headed back down now, it seems like. Teladoc destroyed. Jeez, man, all these things are getting destroyed. But that reminds me, because there's some of these therapeutic companies, science companies, biotech companies on here. Check this out. So we've done some streams over the past couple of weeks, and we've covered a couple different small caps. One of which we've seen, now run like 2 or 3 times is ELYS. And, we just saw some volume coming in, spiked up a ton, came back down, new lows, still high volume, spiked up another couple 100%. Crazy moves, right? Check this out. One of the stocks, I think from 2 weeks ago, we did a stream. We were looking for, higher volume, tickers that are moving down towards lows. And one that popped up was this guy. Like, look at this relative volume on our charts, the bottom of our screen. This stock is getting crushed, right? But all of a sudden, somebody is loading the boat, like absolutely loading the boat as it gets crushed even further. Well, funny enough, what's happening now? The stock is now up 109%. It was actually up 200% at one point, and it pretty much filled the entirety of this gap down from earlier in December. Incredible moves, but that one we found on the list, and I didn't personally add into it, but I added into other ones, and so we're just going to be patiently waiting. But I think, to be honest, this strategy right now is a patient strategy. Like, just wait it out, be patient. But these things are working. So you don't need to have 7 in a row that work. You just need 1 or 2 out of a little list, and you can crush it right off of a trade like that. Imagine having this thing and being up 100, 200% at one point. You're just locking the gains in and letting it ride. You know what I mean? Like, that's what it's all about. So I covered the couple ones that I like, and then I'm in on every Saturday. I just show the portfolio updates and all that stuff, and we'll see if we get moves. We're getting some good volume. Here's one, JSPR, some good volume. Let's see, JNCE. It's been getting some decent volume as well. DBTX, I don't think I'm in this one. I'm not in this one, but it's gotten better volume. ACHL, this chart looks prime for a big pop. Crazy high volume coming in there. LHDX down 10% today again, but the thing is getting killer volume. Again, new lows. It's scary because it's like, oh, shoot, like, do I want to buy these things at new lows? But what ends up happening on that QTNT play, what did it do? It made a new low on Friday, and then it goes 200% today. So you're not necessarily looking for the chart. You're more so looking for the volume. It's more about where the volume is at, where the big money is loading these things kind of out of nowhere. But they're kind of going one by one. They're kind of going. So keep an eye on some of these guys we've talked about on the Sunday night. At the end of the Sunday night streams, we've kind of covered a couple of these. We added some more to our list, and I have a good feeling that these are going to keep moving into January with some big moves. So back to the Webull charts and see what we got in terms of top gainers. Yeah. Let's take a look at this stock. LJAQ, random pump up 180%. QTNT up 100%. ELYS 66%. These are, just low floats. Low floats, man. That's all it is. So that's been kind of working nice. So keep it on the back burner. XBI Labo week today. Yeah, it doesn't look good. I was, and again, I had a short on mRNA. Let me see where it is. I had a short on mRNA today. And after that short, I was looking over. I'm like, oh man, this thing is down like, a lot today. That's probably not good for XBI. Here was the short, right, on the breakdown of that wedge. So XBI is down 2.76%. It just keeps going down, down, down. It's kind of following mRNA. Here's the 1-year chart. It's like really close to breaking down underneath that trend. It's played this game before where it has a quick move down. The next day it snaps right back. So we'll watch it, but it doesn't look good from a technical perspective. This could easily give us a nice big move down. We'll see. A couple bucks, I would think. So we'll keep an eye on that because it's been super weak. So weakness right now, where the weakness is at. Biotechs, healthcare has been pretty weak, believe it or not, or at least it's been relatively strong, but it's weak now. Tech, obviously. Semis are weak. Bonds are weak. Yields are going up. By the way, check the 10-year out. Look at this. 10-year is pretty solid here. It's actually above that 3.8. So now we're looking at 4 and saying, okay, 4, what do we got? What do we got here? I guess 3.9 could be an interesting spot, like right in here. Found that to be a support term resistance. So watch 3.0 or 3.9%. But up to that 4 now, it looks like it's possible on the 10-year. I'm going to consider, we get up towards 4. We'll see how we react there. I'm going to consider adding to my TMF. I've sold some covered calls on it, but I'm looking to consider adding into it at some point soon. We'll see. Surprised ARK doesn't have bigger. I'm surprised too that ARK doesn't have bigger outflows. Check out here's ARK. Let me pull it up. Kathy Wood down 3.68. So it's not down as bad as I thought. It's a lot, but it's not down as bad as I guess it could be. Down sub $30 though on ARK, which you haven't seen sub 30 on ARK since like, I mean, it's lower than that. You haven't seen sub 30 on ARK since 2017, like the summer of 2017. That's crazy. Again, like we've mentioned, like this past year, I haven't bought ARK, but we talk about, on this way down, like it starts to get appealing, right? At some point, if you like the stocks, the problem that I have, and like we always kind of come to this realization, is like, I don't know if I like all those stocks that have super high weights, like Zoom and Roku and whatever. It's like, I mean, maybe they're good, but like, do you have the ability to like look at that and say to yourself, oh, I believe in Zoom? Like, I think I can believe in I can understand and see the argument for Tesla. Now, maybe Kathy Wood and ARK Invest's, valuation expectations and whatnot, maybe a little bit far-fetched. Who knows, though? They're probably smarter than me, right? They definitely are when it comes to like what they look at, for sure. I'm not looking at all the stuff that they're looking at. So they're making some, estimation, I guess. But I don't know. You still want to have, when you're going to invest in something longer term, you still want to, like and believe in the companies that you're investing in. And so to be honest, it probably makes more sense to go through, and make your list of 5-10 stocks and build one of those. You can just put it on any portfolio, buy fractional shares if you can't, buy full shares or whatever, or buy whatever proportion in shares. Or go into like an M1 Finance and you can create one of those like customized like pies, they call it. Pick 10 stocks. You can set the weights for each stock in the portfolio and then just put in however much money you can put in and it will distribute that money across all those stocks in the portfolio. It probably makes more sense to do that yourself than to buy ARK, like in my opinion, right? Pick the stocks you'd like out of ARK and maybe other stocks as well, and then make your own portfolio and then just ride that. Like it just makes more sense. But again, same idea here. At some point, man, this is down to crazy levels. Again, recession, great. This is setting up for, it could keep going down a lot lower. But at some point, the reversal here is going to be pretty cool too. You would think, unless these companies go bankrupt, and they get wiped off the face of the earth, which now it kind of, you look around and you're like, Tesla's probably not going anywhere yet. Zoom probably not going anywhere. Roku, who knows what happens to Roku over time. Could they get bought by someone? Could they, buy other companies out? I don't know. So they're probably not going to go anywhere, but I don't know if you can wrap your head around, holding them, because there's probably better stocks, you can probably find that you have better feelings for anyway. My take. August did not miss it, man. We still got 30 minutes. We're good. Talk about Southwest. No, we have not, but that's a whole mess with all the flights being canceled and delayed and whatever. So the stock is getting hit pretty hard today. I'm kind of interested to see. Let me check out. This is a nice little downtrend here. Yeah, look at that. Nice little downtrend on Southwest. I haven't really checked on airlines, to be honest, too much. Airlines were my favorite, idea going into 2022. And it was like the biggest dud, complete dud on that. Got burnt, lost a good chunk of change, and, it is what it is. Move on. But this has been pretty impressive, the move down and just the trend down. I think what from like my just thought process from how this stuff has kind of worked and how this looks, it seems to me like these companies got crushed during COVID, right? Now, on the backside of COVID, they're trying to figure out, okay, well, how can we cash in? Fuel's been higher. Look, prices have been higher, right? So they're cashing in on the demand that's still been there. The demand's been there, right? And that was one of the bigger things that we talked about, like coming out of the post-COVID, era, was like airline travel demand, pent-up demand. It should be pretty impressive. And then you get the worries of recession, so maybe less travel now, and so that's getting priced in. So that's like a whole mess. But the demand, like that's future pricing, but the demand and the current demand at least has seemingly been there. And so they've been using this opportunity to jack up prices and try to keep their costs as lean as minimal as possible. And it seems like that's coming at the expense of what they're paying employees, what they're paying workers. And so when they're not getting paid properly and you have a situation like you got the holidays and people are going to be dealing with people that they don't want to deal with, as let's say you're working Southwest and you got people who are traveling, who are stressed and who are pissed and have to deal with families and all that stuff. Everyone's, on edge as it is. They're not getting paid enough, and so they're like, yeah, screw it, I'm not showing up to my shift. And when they don't show up to the shift, guess what? You can't fly the planes. And that seems like that's part of the problem. The reality here, there's probably a lot more that goes into the whole deal, I would think. But to me, it just seems like half the problem here, maybe half the problem, is pay your employees more and make them want to actually show up to their jobs. Like, you do that and maybe you wouldn't have these problems. And I don't know, at some point, I guess someone's doing the analysis of like, okay, well, what's a bigger price to pay? Not pay the employees and then get reamed and, whatever we're going to get reamed at and whatever fines and who knows what happens throughout the realities of legal concerns later on, or, pay the employee. What's more expensive, right? Which loss is worse? I don't know. Maybe that's thinking too much into it. ELAS was up 150 today. Yeah, 150%, dude. I mean, I was not going to touch that thing, to be honest, after the big pump it had a couple days back. But, man, the volume has been telling. The volume has been telling. Checking out NVOS. Any volume here? It's trying to perk some volume, at least as of late. Same thing here on this guy. Low float, gap to fill, back up to like 60 cents. That's a big move in the cards one day. Who's going to be flying a recession? Yeah, that's the other side of things too. That's where we're pricing things in, right? In recessionary times, people are going to fly less, travel less, hunker down, and do what they got to do at home. Great thought announcement. I mean, I don't know. I'm just speculating, to be honest, a little bit, but that's kind of what it seems like from what I've read. Articles I've read and everything that I've seen, a lot of times the problem is, or at least it's been the past like 2 years, really coming off the back of COVID, I guess past year and a half. It's crew, like they don't have the crew. And when the crew, I had a situation my parents did recently, maybe like a year ago, where they were flying out of, I think it was Atlantic City, New Jersey, and the crew never showed up. They didn't have a crew or a captain. I forget if it was the crew or a captain. And like there was only one of those flights to where they had to go from there to Atlanta, a day, one of those a day. And it's like, or one every 2 days or something like that. And it's like, well, there's just literally no flights. So you'd have to then fly from like there to Philly, then get there, or just they ended up driving. They ended up getting a rental car and just driving from Atlantic City all the way to Atlanta because they had to pick someone up. So it was a whole thing, but people are just like, you got to do what you got to do. And at this point, it's kind of crazy that can happen, that you can just have a crew not show up. And it's like, if I was the crew, I totally understand why you're doing that. Cause like you're not getting paid enough. So you're striking, whatever, which like it sucks. And I agree, or like, I kind of agree with their reasoning, but then it also sucks that like, you're kind of ruining people's like day. You're really ruining people's day because they're trying to go home and like they're just trying to fly. They have no idea. They have nothing to do with you not getting paid. It's like they feel bad, but sometimes it is what it is. But that's how it seems, at least right now. Also, check this out, Rivian. I think off the back of Tesla to some degree, you're seeing some sympathy on Rivian. Just getting destroyed. New all-time lows on Rivian as well here. Sub $20. Crazy. Talk about Shopify, and it's kind of held up a little better, to be honest. Kathy Woods is fairly heavy in Shopify. Held up decently. Palantir, is that new lows? Yeah, Palantir new lows today, I think, right? Yeah. New lows on Palantir today. Upstart down under 6. We talked about Upstart, Affirm, Coinbase, which, to be honest, they're all down huge again today. The concern that I have on these names, though, is not about, short, whatever. Yeah, sure. But the concern I would have is the upside, the short squeeze. At some point, if you are short these names. So I think into the beginning of next year, be careful. They're going to be a high watch. Coinbase is 1. Upstart is 2. Affirm is like a 3rd. Tesla is great there as well, I think. They'll be on high watch for, positive days, for up days. Because, again, you're going to have aggressive bounce backs on a lot of these names as well at some point. And so intraday, they could be good opportunities. Not necessarily saying that they're great investments. Who knows? Again, they're a lot lower now than where they were, and people were buying them all up. So if you like the fundamental thesis, then great, go ahead. But we shall see. That's what my kind of takeaway, my whole thought process from this whole, I guess, past like couple of years is understanding the macro is like the biggest thing. And to be honest, I realistically have like actual formal, I guess, education on that stuff. But like I always say, like, at the end of the day, experience matters. So just like anything else, just like the stock market, right? If you have formal, my Siri's going off, thinks I'm talking or I'm not. If you have like formal education in, I don't know, economics or whatever, that's great. Cool. Like you can kind of make sense of it. You kind of know the definitions in the books and, what leads to this and what this means and what that means, right? Whatever. Cool. But then it comes down to the actual implementation. And when it comes to the stock market, I think it's one of the coolest things because you don't necessarily need a formal education to figure it out. You could have no experience. If you've been around the past 3 years, you've got a crap ton of experience to play off of, and you've probably learned more from a macroeconomic perspective, from a micro perspective when it comes to individual companies, stocks, and how this stuff works than you would learn in going to school, right? In terms of actionable, like real world stuff. But this has been a fun time to say the least. But my big perspective is this. I want to have, when it comes down to like a longer term portfolio, and you learn this as time goes on, what works best for you. You go through the ups and downs. From a long-term portfolio, like an IRA, something that like, in a sense, I don't want to think about. I want to have that into dividend names. I want to get paid dividends monthly. I want to have that cash flow, have the recurring investments, get them tossed right back in and buy more shares, and have the snowball effect in that way, with having to do as little mental work as possible, have to spend as little mental energy on that as possible. Just know it's doing its thing. Do I need it to beat the market every single year? Like, not necessarily. Do I just need it to do its thing over time? Yes. Like, that's all it is. And just all I need to know is be able to funnel money into that over time and let it do its thing. And, as time goes on, great. You do very well. If you make more money now, then great. You can add more money to that, which can make you more money faster in the long run, right? Compound faster. Cool. That's great. Then when it comes to swing trading, when it comes to anything else, you got to have a really good feel in the macro. And if you don't understand the macro, then there's no point of even trying, because you would be much better off soaking up the macro, or, if you're fine with losing money, great. What is what it is. You're much better off soaking up what's going on and understanding, moves and how things take time to play out and how things move on a day-to-day, week-to-week, month-to-month, year-to-year basis in different economic conditions. And you've got a great example of, the pre-COVID, if you were around, but now for those who were around, how things were pre-COVID. So you have a good feel for that. You got a good feel for things now, COVID, stimulus, all that stuff. Okay, cool. And then what does that lead to? Inflation. And what does it lead to on the back end? And what happens in the back end, the unraveling. And now you can kind of see, and it allows you to be much more prepared for when similar things, again, nothing's going to be the same, but when similar things happen in the future, you'll be much more prepared to take advantage. So it's pretty cool. It's pretty cool. Kind of crazy how fast you can learn, change. No, I mean, 100%. Last year I was doing way different things. Look back on it. 100%. I mean, now I feel the same way. And the kind of the way that I have things, I guess, the machine rolling now, and I think it's like we're just kind of getting started. That's how I feel. But I think I got a pretty decent way of doing things in terms of situating different accounts for the short term and then having accounts for the longer term, and just being able to slowly but surely put money into the long term from the short term. And if you can grow that, and you're doing good. So that's what it's all about. Sony. What do we got on Sony? Yeah, 50 SMA is going on it now. Starting to push down. I would love to see a potential test back up into the upper 70s and then a rejection ideally, but it just seems like it's just dropping off a cliff now. Well, off a cliff is relative. Tesla's dropping off a cliff. All at the positive changes. No, yeah, 100%. 100%. Because at the end of the day, you can complain about the markets, you can complain about Tesla, you can complain about your portfolios going down, whatever. But at the end of the day, you have everything in front of you to be able to counter that and to make money in any environment. But you got to have a feel for the macro. You got to have a feel for the macro of experience, and adding in things like technicals or other ways to analyze, will help. Slowly on the right track, steered away from our losing strategies. I think so. I think even when things get super hot, like let's just say, what I used to love to trade was small cap swings, right? If let's just say that they get hot again, I know now that that's not a sustainable long-term setup or strategy, right? So fine. Right? What can I do? What's always going to be there? And that's why I've kind of come more onto the large cap day trades and the option stuff, because they're always there. And it's not about, like it's so risky, and it's not like, no, you have to figure out, it takes time, but you have to figure out what works for you, so where you can manage risk properly and you can take advantage of opportunities. It's not always going to be like you're going to win every day, right? But take advantage of opportunities to the point where you have a profitable strategy over whatever time frame you care about that you can replicate, and that will always be there. Bull market, bear market, this market, doesn't matter, And that's what it's all about. And that's like the biggest thing for me, was the past year was I felt like it's been a battle of I need to figure it out for myself, what works for me, which doesn't work for everybody. What is going to work for me that I can come in every day or every week or whatever and replicate and not have to worry about any of the conditions. I don't need to think about what's happening. I love to pay attention and follow it from a macro perspective, and that could kind of guide the longer term portfolios. Maybe, do I want to get into bonds? Do I want to, play TLT? Do I want to play, I don't know, some inverse? Do I want to put on some hedges? You know what I mean? Depending upon where we are macro environment wise, which is great. But day to day, I think that I found that the day trade side of things is a lot of fun, and it takes a lot of mental effort, but it's really rewarding. It really is. So let's check in on the portfolios today. Today, we are up. Now, here's the main individual Webull. I reset the portfolio, by the way, to 8.5 to start this week, which today's the first day. We're up about $400 almost. Actually, we're technically on the day's P&L. We're up over 400. Let's see. What did I do? Let's go back and just so it's all fully transparent. What do we trade? Here's today. I know it's small, but it's the best I can do in terms of at least on the stream right now. We had Caterpillar for $276. That was awesome. We had Rivian for $15, very small, and mRNA for about $100. And then the rest of them are all swings. We have current some swings. So lost 12 on that, unrealized, up 5 there, unrealized, up 14 there, unrealized, and up 5 there. So pretty minimal on the swing side of things. So it pretty much was all day trades. About 275 on Caterpillar, about $100 on mRNA, and about 15, 16 on Rivian. Adds up to close to $400. Boom. So like I said, I'm good if this is how the week kind of go. If that was my total on the week, it's 400 after this week, short week, low volume, not expecting too much. I'm fine with that. So I'm not going to try to be forcing much at all. Killing it this month. I mean, it's been. Here's the Roth. Roth, I played Caterpillar today too, so I pretty much mirrored that trade. Roth is up to $5.95. It's a small account. It's up $46 today, $47 today. Past 5, it's up 57. But yeah, today was just one trade, Caterpillar, on the Roth. Here's here's today's P&L. Just one stock, Caterpillar, one and done. That's it. But I think that's the highest that the Roth, the small accounts been. We're at the highest I think we've gotten the small accounts to ever. So far. It took a while to kind of get through a lot of the crap. If you go look at the total account value, go back 6 months, it looks like it's a steadily rising kind of curve, but it really wasn't until late October that we really kind of turned things on. And then we had a pretty weird mental situation towards end of the month here. And then we kind of finished or took things up into December, end of November into December. It was a lot of like mental errors that I could have avoided. So we had a big push. The account got to 580. Yeah, it was up to 580. I was on a pretty good run mid-November and then fell off like the next 2 weeks. I was away. It was like I wasn't trading every day. I had one stupid trade when I was away. I was on my phone. I honestly don't even know why. I never will do that again. All I learned is that like these things, like sometimes they work, but they've been bigger losers more than they've been winners. And so I net lose money when I trade on my phone, when I trade at the gym. Like I just won't do that ever again. When I'm traveling, I won't do it again. You know what I mean? And so you cut that stuff out, and over time you figure things out. And over time the curve kind of steepens and is steady. But that's the highest it's been here on the small account. So we're about $400 away from hitting $1,000 in the small account, from a couple $100 taking it to 1,000. I think we can do the math on how much it was. Pretty sure it's more than, I guess maybe that is accurate. 174, I guess, of cumulative P&L, but this is going back 6 months. I think I started the challenge back in July, I want to say. So I forget where we were in July. Yeah, $130 in July is where the account was. We had I think we added $50 and we added $100 or $200 maybe max on a reset after falling back down to 30. So essentially you could say that we didn't blow it up, but we had 2 blow-ups and then eventually got, substantially more profitable after the second try on it. But a lot of that was kind of, figuring things out, and was the first time I was really day trading in it. So, or just in general, right, consistently. So we'll see. We will see. Cumulative P&L, we'll see. Trading from the phone sucks. Yeah, and some people like it, but I don't. I still do it from my phone, like entering in orders. Like what I'll do is I'll have like my main like Webull portfolio, right? I'll have my main like layout like this pulled up here, and I'll be trading on this for like whatever. But then I'll enter like my small account, I'll enter on my phone. That's fine. What I mean by the phone is like I don't have all the things in front of me that I want to have, like in case some crazy news hits. Like I want to have a news streamer just up, just so I can make sure that I don't get caught in something as some crazy news hits. And that was what happened when I was away too. There was a missile strike in like Poland. I didn't know. I was on my, I don't have access to all that information at the same speed I would have it here. So it's just not conducive to consistency. But some good lessons for sure. I'll tell you that. I got to do an update video on the small account probably by the end of this week, probably Thursday. We'll see. If you can minimize losses over the course of your career, you can be more profitable overall. That's it. And that's as stupid as it sounds. Like you'll hear that. I feel like you hear that same like saying all the time. I'm going to zoom in on SPY's 5-minute chart here for the last like few minutes of the day. See what happens. Just kind of a weird, just kind of choppy consolidation day. So again, $400 on a day like this, I love it. Great. We didn't really get much range, much direction. Cool. Like still was able to find good stuff, and that's awesome. But you hear everyone say like it's about the risk management, managing your losses, until you like actually start to journal it, chart it, see the stuff, see the numbers. Like that's when you realize it. I mean, you go through and you're like, oh, I think this is good. And, oh man, why am I losing money here? And why am I doing this? And then when you start realizing like, oh wait, there's the similarity is that I'm losing every single time I trade QQQ, or, I'm losing every single time I'm trading, same day expirations, or I'm losing every single time I'm trading, monthly expirations. You figure out what was not working, you eliminate that, but it takes time. It doesn't happen today. Like, of course you make a mistake today and you want to fix it. I know everyone does. We all do, but it's not that realistic to be able to fix it that fast. But over time you can eliminate those things. And that's what it's all about. Do you read the tape when you trade? To be honest, not much. It's mostly just charts. When it comes down to it, like here's what I'll look at. I'm looking at the level 2 a bit. So, I'm looking at the bids, the ask. I'm really looking at the visual on the level 2, and all it's going to show me, whatever lines have, I guess, a steeper slope, or are appearing larger, like the green or the red, that's meaning, more buyers are stacked up on the bids, right, all the way back through here. More sellers are stacked up on the ask all the way up through whatever price point you can kind of hover over. And so I'll look at that a good bit on the actual stock. But to be honest, I don't really. I was just thinking to myself too on level two. You hear that too a lot. I don't know. Maybe, and everyone's got their own style and strategy, I guess. I'm much more just chart focused. If the chart says this, then it speaks enough for me, right? But people are like, yeah, I start reading the tape and I can start seeing the tape better, and I read the tape, and like you hear that phrase kind of over and over again. But like realistically, I just like to, and of course you can look and say, okay, we're seeing a lot of orders coming in above the ask or below the bid, and at the bid or at the ask. Like I can understand where you're coming from and get a general feel, but I don't think it's, to be honest, as easy to read as, people who say, oh yeah, I just read the tape and, I can see a lot. Like it's, that gets people so confused, and it had me confused for a long time when I originally started hearing that stuff. I'm like, what do you mean? And I got super deep into it, and I thought that was the answer, and like it was not the answer. Like it doesn't matter. At the end of the day, it still comes down to the charts. It comes down to the levels, your risk, and managing it and executing. And that's my take on it. Starting to leverage trade cryptos, 5x. Yeah, I've been seeing people who do that too on social media, a little bit on Twitter, because you can get some good leverage, and you don't have to play that with massive size, but I have seen them do pretty well because, just like anything else, technicals work there too, right? Crypto volume on Bitcoin. Let's take a look at Bitcoin. I haven't seen any of the volume numbers necessarily, but I'm curious as to, it just kind of fell off a little bit there. Let's check in on the volume. Yeah, I mean, based off of this, and I don't know, this is just Bitcoin futures on CME. I don't know how, serious this is and how reliable this data is, but the volumes have come down a lot. Go back in time. Yeah, they've come the past couple months. We're trending down substantially on that. That's for sure. By the way, too, this doesn't look good. Bitcoin rejecting that level. Prior support, turn resistance, rejected that level, had this trend line, broke the trend line, can't get above it, rejecting it. It does not look good, especially if it can't regain 17,000. So I don't know. I think Bitcoin, I have an alert set for right here, but I honestly wouldn't be opposed to the problem is I don't want to short like the miners or Coinbase right now because they're not necessarily trading with Bitcoin. If you look at Bitcoin and you go look at Coinbase, or here's Mara, chart's completely different than Bitcoin. Here's Coinbase. Chart's pretty different from Bitcoin. So they're not trading together perfectly. So it's like if you want to short something, you got to short actually the futures or just short Bitcoin or play BITO, which is, I believe they just hold futures. So it's essentially like trading Bitcoin. Yeah, BITO, you'd play puts here or just short this, I think would be the best way to do it. But it's tough to play the miners and to play Coinbase off of the way Bitcoin trades. It doesn't work perfectly. I wish it did, but it just does not. It's more so, to be honest, in terms of the miners. The miners are in a capitulation kind of situation, I think, where they're getting destroyed. And it makes sense for right now based on the crypto environment. But could be opportunity there at some point. Maybe the miners, eventually if Bitcoin bases and does its thing. I think that you're kind of in a point where Bitcoin is people are talking about all these different things about, oh yeah, well, Bitcoin bear markets and look what happened last time. And, eventually then it did this. Yes, this time, like we've seen with a lot of stocks, could very well be different in terms of it could last a little bit longer than maybe people are thinking, potentially. So we'll see. We shall see. But yeah, look at that day on SPY, right? Range today. What's the range? 383 on the high end. Pre-market, we actually were up over 385, then just kind of fell off into the open, which is kind of funny. And then we came down to about 380, actually just below 380, 379.66. So about a $3, almost a $3.50 range roughly on the day, which is not much. Not as bad as it was, I believe, back around Thanksgiving time. But we had a pretty minimal range then on one of those trading days. But pretty minimal range. So the good news is that, hey, we break this range in terms of, we break down below 378, or we break above 383, we should get a decent sized move, hopefully. But until then, we're just kind of in this little tight range. So we shall see. The plan is today's Tuesday. I usually do 3 streams a week. I try to. This week I want to we'll probably do tomorrow for Power Hour, and then Friday for Power Hour. That's the plan in terms of streams. So stay tuned for that. And then I'll probably do a small account update on Thursday. Yeah, Thursday for like a monthly update. I try to do one to two a month to update how that's going, what's working, what's not working, all that good stuff. And it's working. Stuff's working pretty well, I think, as of now. So it's time to start sizing up, I think, on the small account because, we're at $600 and I only played one contract today on the Caterpillar play, and the contract went from, I think I bought it at like 140 and I sold it at like 187. So it made $47 like that. Right, that's great. But as the account gets larger, it's time to start scaling it up. So I can probably start playing with a little bit more size in there. I haven't really felt the need or necessarily the reasoning to do so yet, but I think we can start doing that little by little over time. Or maybe just playing one contract, but playing a more in-the-money contract, so it's a little more expensive, something like that. We'll see. I think that's probably a fair way to do it. So we'll see. But the big plays are the where the strength has been the Dow, which the Dow finished green. The Dow finished green today. Dow finished green. XLE and even XLF, believe it or not, financial stocks doing decently today. Last check here over on that 10-year, 3.85, my friends. Keeping an eye on this. I'm looking for the 10-year to roll over and reject into this area that we're in right now. If so, I'll probably add to TMF at some point. But the reality here on this 10-year is this, as much as everyone's talking recession fears, this is not necessarily signaling recession fears just yet. Like, it is and it isn't. The overall macro is signaling that, but the 10-year to really give us like, oh my, recession fears, like this would need to be coming down hard. Why? Because that means that the Fed's going to have to cut if we're in a bad recession, cut rates. So we'll see. But I wouldn't get like, in terms of horrible bad recession, like when the 10-year starts plummeting, then that's one of the signs that we got to be very, very careful, especially if the Fed has yet to cut rates or even pause their hikes yet. We'll see, but that's something to keep in mind going forward. So hope you guys have a great rest of your holiday week. I will see you tomorrow. If you want to hang out for the stream, hit the thumbs up button on the way out. And that's that. Any other links, resources are down below. And I appreciate you guys as always. Peace.